Guys, last week these two factors have heavily impacted the movement of the S&P 500, and in the coming week these four factors are going to impact the S&P 500 heavily. Not just the S&P 500 but the Dow Jones, Nasdaq and all other indices and the entire US stock market and the global stock market. In my previous S&P 500 technical analysis, I mentioned this thing that the S&P 500 has reached to its zenith. And what was the zenith? The zenith was from 4291, that is the golden resistance, through 4310. 4310 was the 61.8% of the Fibonacci retracement level. The zone 4291 to 4310 is a very heavy resistance zone, and that is somewhere around this the zone there will be a zenith of the S&P 500. And that is why you can see that the S&P 500 has again and again struggled to breach the 4291 and to sustain and to close above the 4291. And other than that, on Friday there came an illogical bullish movement and the S&P 500 tried to gain through that the illogical bullish movement, but again it came down, closed below 4310. That was the 61.8% of the Fibonacci retracement level. And that was the same thing I mentioned to my Patreon community members even before the open of the stock market on June 9th, that as per the Fib retracement theory, the S&P 500 should give up when it hits or comes around 4310. Also, a little up down is okay and acceptable. Thus, no need to fear or worry if you see S&P 500 has minutely breached the 4310 level. And what you can see that on Friday, the level was 4310. It moved up to 4321, I guess, to 1 or 22. Okay, so it has minutely breached the 4310. But we knew that it will not be able to sustain and it will come down, and you can clearly see that it came down. And another reason why the S&P 500 was supposed to come down to 4291, for that it was mentioned that the S&P 500 has closed for the very first time above its heavy resistance of 4291. This is why technically it should retest this level before it can move up any further. And today means on Friday, upon open or after some time, if this doesn't happen, means if a retest to 4291 doesn't happen, then the risk factor in the stock market, the entire US stock market, will increase to the peak levels. And that is what has happened. Initially it moved up and it remained above 4300, but because it failed to retest the 4291, that is why we have seen a heavy intraday bearish movement. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis for the week of June 12th, 2023. That is from June 12th, that will be Monday, through June 16th, that will be Friday. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture for a month, for a quarter or so. Okay. So there is an important thing that is happening on the weekly chart. Next week, if there comes anything green next week, okay, that will force or that will make the S&P 500 as absolute saturated in the bull side. Okay, and I will show you that historically what has happened whenever it goes absolute saturated on the weekly chart. Okay, so almost all of the times it has failed. Okay, so anything green, even by 1 point, even just by 1 point, then also it will saturate. Okay, so weekly chart means the big picture. The second point of the agenda of this S&P 500 technical analysis is the S&P 500 support and resistance levels. So I will tell you the support and resistance levels. So last week I mentioned for 4291 and 4310. Okay, anything okay, means whatever happens, S&P 500 will remain around these the levels, and that is why, okay, I did not give you any of these the levels in this the bull side, rather in the bearish side, yes, up to 4155 or 3972. Okay, so I will give you the support and resistance levels for the next week, because there are events, CPI, okay, and then the FOMC. So something good and something big is expected to happen. Now the third point of the agenda of this S&P 500 technical analysis is the CPI. CPI okay, means the inflation, CPI and the core CPI. Okay, and then the possible or the probable FOMC outcome based on the inflation, based on the CPI data. Okay, and also I will show you that for last 6 or 7 months the CPI, the inflation is trading at the technical bottom. Okay, although it is trading around 4.9%, but again that is the technical bottom. Then comes the fourth point of the agenda of this S&P 500 technical analysis. And in the fourth point of the agenda, I will do the S&P 500 technical analysis on the daily chart. Daily chart means the short term picture for a week, for 2 weeks, for a month or so. Okay, that's it. So what is happening, okay, through the daily chart on the the daily chart, okay, in the S&P 500, that I will tell you through the technical analysis, okay, of the S&P 500. Then comes the fifth and the final point of the agenda of this S&P 500 technical analysis. And in this the fifth point of the agenda, I will give you the probable movement of the S&P 500 from June 12th, which is Monday, through June 16th, that will be Friday. What is going to happen in the S&P 500 from Monday through Friday? Okay, so I will give you the probable movement, okay, in the last point of the agenda. For example, last week I mentioned that the S&P 500 will have to try and will have to struggle again and again for 2, 3, 4, 5 days before it can actually move up. And even if it will be able to breach the 4291, then also it will come back to 4291. This is what has happened on Friday. Okay, so this kind of the probable movement, that what will happen, okay, or what will happen if it goes up, or what is going to happen after the FOMC inflation, means a lot of factors. Okay, so guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to begin with the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. This is the weekly chart. Let me write it down. Weekly, W as in weekly chart. Weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. Now let's first analyze the candle itself. If you look into this, the weekly candle, the candle has closed as a green candle on the weekly chart. Okay, and the shape of the candle is a kind of spindle. Okay, but not a perfect spindle. Okay, just a normal spindle. Okay, and secondly, it's a bullish candle. So this candle is giving a mixed signal. Mixed signal means it says that it all depends on the stock market, on the S&P 500. If it want to move up, then yes, the candle is supporting that the bullish movement. And also at the same time, if it wants to give up, then yes, again the candle is supporting that the bearish movement. Okay, that is why there is the neutral. So we can say that this candle is neutral. It is supporting both bullish and bearish. Now it depends on the movement. Now it depends on the S&P 500, that what the S&P 500 want to do. And this will be more clear, okay, when I will analyze the technical indicators, right? So let's see what the technical indicators are saying on this, the weekly chart. So as such, you will not see, much difference, okay, but I will show you the difference when I will discuss the stochastic RSI. As of now, if you see that the S&P 500 on the weekly chart is trading in between the upper band of the Bollinger Band and the median of the Bollinger Band. This means that the S&P 500 is bullish through the Bollinger Bands on the weekly chart. Now comes the moving averages. There is a clear fan out in the moving averages. Secondly, the S&P 500 has closed in between, so not in between, but above all of these the moving averages. This means that the S&P 500 is clearly bullish through these the moving averages. Then comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud and closing above the Ichimoku cloud, this means that the S&P 500 is clearly bullish through the Ichimoku cloud, right? Now comes some other technical indicators, and this is where the picture is going to change. First comes the MACD. Both MACD and the signal both are positive. This means, and secondly, MACD is more than the signal. This means that the S&P 500 is bullish through the MACD. MACD is moving average convergence divergence, right? Then comes the stochastic RSI. Okay, because the stochastic RSI K channel is more than the D channel. This means that the S&P 500 is clearly bullish through the stochastic RSI. Okay, then comes a divergence is increasing and all other technical indicators are good and fine. Okay, now let's talk about the stochastic RSI in detail. Now the stochastic RSI, K channel is more than the D channel, fine. Okay, it says that the S&P 500 on the weekly chart is bullish through the stochastic RSI. So where is the problem? The problem is that the K channel is trading at 100. Okay, and it's been 2 weeks. Continuously for 2 weeks the K channel is trading at 100. Okay, and this is on the weekly chart. If this would have been seen on the daily chart, then for once, yes, we might have accepted the fact that for 2 or 3 days, okay, it can trade at 100. But this has happened on the weekly chart. 2 consecutive weeks, K channel is 100. This means S&P 500 is heavily unstable through the weekly chart, right? Second thing, the D channel. The D channel will be as soon as the S&P 500 goes green. Okay, let's say there comes a gap up open, or irrespective of any open, if the S&P 500 intraday, okay, if it try to move up either on Monday, Tuesday, means any day, okay, whenever it try to breach the 4299 level, okay, the D channel will become most likely D channel will also become 100. Okay, K channel is 100, D channel is 100 in the third week, heavily unstable. And if I show you the historical movement, last time we have seen this thing happening, this was yes, this was here, this was the thing. Okay, it moved up, K channel become 100, and in that the next week, okay, in the week of August 15th 2022, initially it moved up. That was the for the profit booking in order to trap the retail traders. Okay, and both becomes 100 each, K and D, and then a heavy fall. Okay, so that was back in August 2022, and before that we have seen the same thing happening technically when exactly, when back in 2020. Yes, back in 2020, in August 2020. Okay, almost similar kind of situation. As soon as it becomes 100, there came a heavy fall. Okay, so now the picture is clear that the S&P 500 is trading at the unstable levels. It itself, the S&P 500 is clearly unstable. Okay, next week as soon as it goes green, then highly likely, okay, because once the market opens, once the stock market opens, then only we will come to know about the D channel, okay, the exact value of the D channel. But calculating the previous values, looks like that the D channel will be highly likely, it will be 100. As soon as it goes green, even by 1 point, then also, okay, it is done, right? So historically it has hardly ever survived, okay, on these the saturated levels, okay, the K and the D levels. For 2 weeks the K is 100. That is again, so that is the very first indication, okay, it is already unstable. Next week if it goes green, then it will be again, very much unstable. Okay, so that is with the stochastic RSI, right? And if you are my Patreon community member, okay, then upon open I will tell you, okay, that if the D is 100 or not, and what is initially expected to happen on Monday, okay, in this particular case, right? So now what we have seen that on the weekly chart of the S&P 500, the S&P 500 is bullish through the Bollinger Bands. The S&P 500 is bullish through the moving averages. The S&P 500 is bullish through the Ichimoku cloud on the weekly chart. The S&P 500 is bullish through the MACD on the weekly chart. The S&P 500 is bullish through the stochastic RSI on the weekly chart. Technically, it is absolute bullish, 100% bullish, just like last week, okay, on the weekly chart. But at the same time, through the stochastic RSI, it is 100% unstable. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community for the daily updates, the daily analysis, I have given the link in the description of the video and also in the comment section. Now guys, I am going to talk about the second point of the agenda of this S&P 500 technical analysis. And the second point of the agenda is the support and resistance levels for the S&P 500 for the coming week. So the support and resistance levels, as I mentioned earlier also, that 4291 is the golden resistance, and 4310 is the 61.8% of the Fibonacci retracement level, right? Also guys, there is one more, there's the important information that I forgot to share with you, that if you want to participate in my S&P 500 knowledge transfer program, in order to learn the movement, the strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, and much more, then I am offering a flat 25% discount that is applicable until June 30th. So if you want to participate in my S&P 500 knowledge transfer program, and if you want to learn the predictions, the movement, means whatever I do, okay, this is the same thing, okay. So the offer is valid until June 30th. And in order to avail the discount, you can simply drop me an email. I have given my email address in the description of the video. Anyways guys, so I was talking about the 4310 and 4291, right? Now because on Friday it breached the 4310, okay, so there was this very little breach, okay, 0.2% I guess. That is why I am also keeping 4331, okay, that is the next resistance level, okay. However, S&P 500, okay, as of now is expected to struggle around, okay, this is the zone, that is from 4310 to 4291, because the S&P 500 is already trading at the saturated levels, right? That is why I'm keeping this the zone, okay, as is, and just okay, and I've introduced just one more level, otherwise, okay. Now the support side. The support side, okay, we have this so far the 4291, because the S&P 500 has closed approximately 4299, okay. Then the next very good, very heavy support is at 4265. If you notice, this was the heavy support, 4265. Again and again the S&P 500 found support at or around 4265. And this was the same thing, okay, I have mentioned many times to my Patreon community members, that as long as it is holding above 4265, the S&P 500 can hold and can even try to move up. But once it gives up, once it closes below 4265, then there will be a fall. And surprisingly, it did not give up. Okay, whenever it came down, 4265 gave the necessary support, right? Anyways, after 4265, then we have the 4237, 4227, 4207, 4185 and 4155. Now about the 4155. So 4155, 4310 is the 61.8% Fibonacci retracement level. 4155 is the 50% of the Fibonacci retracement level, okay. Now the concept says, once the S&P 500 or any other index or any other stock or anything has breached the 50% level of the Fibonacci retracement, okay, then it will head towards the 61.8%, okay. But there is no guarantee that it will be able to hit the 61.8%. However, if it is able to hit the 61.8%, then it has to come back to the 50% level to test or to retest. And once it survives above the 50% of the Fibonacci retracement level, then only it is allowed to retrace or to retrace bullish and to move like this, okay. This means that as of now S&P 500 is trading around 4300, 4299 precisely, okay. So it's this, the movement to 4155 is due. The movement is simply due. It has not yet fulfilled the technical obligation, okay. It might take some time, but it will. Once it comes down and if it holds and survives above 4155, then only it is permitted to get a bullish reversal, and then only that time, okay, this time it will be able to breach and sustain comfortably above these levels, and then it will be able to move up. So far it is not expected and it is not in the picture, because on Wednesday the Federal Open Market Committee members will meet, and there will be a press conference of the Federal Reserve Chairman. If there comes another hike, then this is it's done, and this will be the peak. Okay, this is the same thing that I mentioned in the previous S&P 500 technical analysis, that this is the peak. This is the most likely peak that we are going to see before the recession. Okay, and then after 1 or after 2 years we will see the S&P 500 back around these levels. Okay, once the recession is over, right? So recession, about the recession, as you know that the Federal Reserve has the members, they have themselves confirmed that there will be a recession, a mild recession. Okay, anyways, now comes more support levels. More support levels we have: 4110, 4099, 4065, 4035. Any heavy fall at first find very good support around 4155. A fall from 4155 will find a very heavy support at 4035, very good support. After 4035, then the next levels that are there in the picture, then we have 3990, 3960, and in between these we have 3972. What was 3972? 3972 was the level from where the S&P 500 was manipulated, and since then it is trading above 3972, and the retest to the level 3972 is still due. Okay, S&P 500 has not yet retested the level. Okay, and as I mentioned earlier, that as per my analysis, as per my research, okay, once the S&P 500, okay, particularly the S&P 500, once it is manipulated and it moves up, okay, heavily, then after some time, it might take a few hours, few days, or few weeks, it comes back to the levels. Okay, it comes back to the levels from where it was manipulated, and again this theory has proven itself 100% of the time, right? So 3972, it will be back to 3972. So then we have 3930 or 3937 to be precise. Okay, so next heavy support it will find at 3937 or 3930. Then 3884, another good support, 3840. From 3840 to 3790, this is going to act as a very strong cushion for the S&P 500. Okay, next week S&P 500 is not expected to breach 3840 or 3790. Now you might want to ask the question that why I am talking about 3700 or 3800. Okay, and why I am not talking about this, the bullish movement towards, you know, these are further levels. The reason is that the market manipulators, the stock market manipulators, okay, they have only one day, only and only one day, that will be the Monday. And this was the same thing I mentioned to my Patreon community members before the closing of the stock market in the final update, that now only one day left, that is Monday. And this means if the market manipulators have any more plans, okay, any more plans means they already manipulated the stock market on Friday. That is why the S&P 500 was able to move up. Otherwise it has struggled a lot. Okay, and it failed again and again. Okay, if they have any more plans, then they can execute their plan on Monday. Okay, only on Monday. They have only Monday and nothing else, because from Tuesday morning onwards, the entire stock market, the S&P 500 and everything, so the market manipulators won't be able to do anything or much. They won't be able to do anything, or they won't be able to do much, and then they will have to follow everyone else. This means that if the prediction, okay, if it comes true, and if the Federal Reserve, if the inflation takes, okay, a bullish reversal, and if that compels the Federal Reserve, and if that actually, yes, if that compels the Federal Reserve to raise the interest rates, as the 70% chances they are going to raise the interest rates, in that case there will be no more bullish movement. It is done. In that case there will be only bearish movement, only and only the bearish movement, and a fall or a heavy fall. Okay, as of now, if I calculate that fall from this the current level 4000 approximately 300, then it comes around 10%, 11%, or 12%, approximately 12%. Okay, so historically we have seen that S&P 500, you know, falling by, you know, 10%, 8 to 10% easily within a week. Okay, so that's not a big deal. That is why, okay, I'm keeping it up to 3790, but from 3840 to 3790 there is a very strong cushion. Okay, not because the S&P 500 cannot come below, okay, this level, no, because historically these are the technical levels, okay, my calculated these are the levels, and they have proven themselves historically again and again, they have proven themselves, okay. This is the level. That is why this is going to act as a very strong cushion, and any fall, okay, even in the worst case scenario, the S&P 500 won't be able to breach this particular, okay, zone. So guys, once again, if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you want to join my Patreon community for the daily updates and daily analysis of the S&P 500, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the CPI and the FOMC. So at first I am going to discuss the CPI. Okay. So recently we have seen the data, okay, whether this was the PPI data, okay, PPI, or the PCE or the core PCE, okay, that is considered heavily by these Feds, okay, and okay, other than that the consumers, okay, expenditure, okay, and the recently, okay, so recently we have seen the non-farm payroll data, okay, all of these data, all of these economic, okay, the data, okay, has confirmed that the inflation is holding, and the people have the money, people are paying for the services or the products, okay, and the producer, they are demanding the price or more than expected price, and because people have the money, so people are buying, still buying, and they are paying, okay. But there is a kind of bubble, okay, so there is this, okay, a bubble, because in this particular case, when the interest rates are very high, extremely high, okay, and people are still getting the jobs, they have the money, okay, it's not about the jobs, but they have the money. That is why the producers, they are asking for the price, and they have raised the price of essential commodities and everyone, and everything, and people are still paying the money, okay, and at the same time the interest rates are very high. So this is a mismatch. This is a mismatch. Historically, okay, this was never seen. Historically, a strong labor market and a recession never ever seen in any of the economies, okay, or in any of the country, right? This means that again, okay, economically and statistically, okay, and through any of the data, through any of the analysis, this is not allowed. That is why it is a probable bubble, okay. And that is why the Feds, they are expecting a mild recession, but that mild can actually, it may convert into, some great recession, some good recession, okay. Now, so what's so special about the CPI or this the core CPI? The problem is that the CPI, you can see that the CPI is coming down, right? This is the CPI, the headline inflation. The core CPI, that excludes the prices of the food and energy, okay, and the core CPI is heavily considered by the Feds. The core CPI is stagnant. It is stagnant. It is neither coming down nor moving up. This clearly means that the inflation is holding, okay. Other than that, the recent, the last month, the headline inflation, if you notice the headline inflation, okay, what has happened, that it was coming down, 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 and down, and down, and down, and down. But this time, okay, so in the last month, it was 5%. Okay, in the last month it was 4.9%, okay, a minute decline. This again has confirmed that the inflation is holding. All of the factors, the technical factors and the data is saying that the inflation is holding. Now, because here I am doing the technical analysis, so I need to look into these things through technicals, right? If you look into the stochastic RSI, 1 2 3 4 1 2 3 4 5 6 7 8 7 for last 7 months, the S&P 500, sorry, not the S&P 500, but the inflation, okay, the headline inflation, the CPI, it is trading at the absolute bottom, okay, and a bullish reversal is due. A bullish reversal is due or long due, okay. So just for an example, okay, when the inflation, it started to move up, it moved up, moved up and moved up, and then there came a break, because at this time it was trading at the absolute top levels. Okay, these are critical levels. Okay, at the absolute high levels. But then what happened? Then there came a reversal even. Okay, so although there was a small reversal, okay, it was there for 1, 2 or 3 months, and then it resumed, okay, its bullish movement, right? So historically we have seen that the flow of the stock market is not like this. Okay, or anything that is in the stock market, okay, cannot be seen trading like this. Okay, that it is falling, falling, falling and falling. No, this is not allowed. Okay, what happens in the stock market and how the things they work in the stock market? A sequential decline, okay, or a sequential upward bullish movement. This is how the stock market works, right? And in this case, what you are going to see, what you are going to notice, that it moved up heavily, and then at one point of the time, okay, so it was holding, it came down a bit, and then again it resumed again down and boom. But in this case, what you are going to notice, that it hardly ever there was this hold, okay, in this or decline, okay, in this particular decline. This means that the recent data and all other supporting data, okay, these data have confirmed that the inflation is holding. This means that in the next week, particularly on Tuesday, okay, the due, okay, what was the due? A bullish reversal that can be expected in the inflation, okay, and that we are expecting for some good time. And now, because technically it is trading at the absolute bottom, so this means that there should come, okay, a reversal, a bullish reversal in the inflation. Okay, now comes the FOMC. Now there will be two scenarios. Okay, number one scenario, that there comes a bullish reversal in the CPI, because the CPI data and the core CPI data will be published one day before the FOMC meeting. Okay, this means that this data will impact the decision of the committee. Okay, so members, they will have to consider this data. So if there comes a bullish reversal in the headline inflation, then almost 100% confirm that the Feds will raise the interest rates by at least by 25 bps. Last time the Federal Open Market Committee members, okay, some of the members were in favor of 50 bps, but still Feds, okay, they went for the 25 bps. Second case, if there comes further decline in the inflation, okay, this will be exceptional. Okay, if that happens, then by how much? If there comes again, okay, a kind of holding just by like from 4.9 to 4.85 or from 4.8, then again this means the inflation is holding, it is sticky. Okay, in that case we need to wait for the FOMC outcome, okay, that what the Feds have decided or have actually decided. Okay, and yes, in this case also the Feds can raise the interest rate by 25 bps, but the chances will not be 100%, chances will be like 80% to 85% or so. Okay, if there comes a significant decline from 4.9 to like 4.5%, 4% or so, significant decline, in that case, yes, most likely the Feds might not raise the interest rates, and they can finally they can go for the pause. Okay, they can pause. Okay, means then they will not raise the interest rates, but at the same time they will not go for any rate cuts. They will keep the rates unchanged at 5.25% at these levels. Means your loans will be costlier, all of the loans, any kind of loans, okay, will be costlier and will remain costlier for a few more months until and unless the Feds decides to cut the rates, okay, from 5.25%, right? So this is clear. So very first thing is, even if there comes, okay, if the numbers come same 4.9%, then also, okay, almost 100% chances that the Feds will raise the interest rates. Anything above 4.9 means yes, a rate again, okay, increase in the interest rates. Okay, and I have shown you, okay, this the outcome of or this the federal FOMC, okay, Federal Open Market Committee minutes of the meetings, and in the minutes of the meetings it was clearly mentioned that yes, still the Feds have some room to raise the interest rates at least for 1 or 2 more times, right? So Feds have never said that no, they are not going to raise the interest rate. They are saying, they have mentioned that it will be data driven. If the data says that the inflation is sticky, then definitely the Feds will raise the interest rates. Okay, so let's not speculate anymore, but let's stick to these the numbers. Now it is clear that anything at or above 4.9 or like 4.85 even, okay, will be considered as bullish and the sticky and the inflation is holding, okay, that will heavily increase the chances of seeing, okay, rate hike, okay, another rate hike. Anything that says the significant decline in the inflation, okay, that will mean that the Feds, okay, Feds are most likely Feds are going to pause the interest rates. But there is a very interesting thing that how we know or how we can, you know, see that whether the Feds are going to raise the interest rates or not, okay, that I will tell you in the last point of the agenda, okay, in the fifth point of the agenda, that is the probable movement of the S&P 500, right? So this is the inflation, and this is how the FOMC, okay, Federal Open Market Committee members, they will react to this data. Already the whatever data was published, okay, that has already confirmed that the inflation is holding, okay. So even in the absence of this, the CPI, the Feds would have considered that data. That is why the chances as of now are 70% that the Feds are going to raise the interest rates just one more time, okay. So now because the CPI data will be published one day before the FOMC, so it can make or break the things, or make or break the entire US stock market, right? So guys, once again, if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. And if you want to avail the flat 25% discount on this, the S&P 500 knowledge transfer program, then please send me an email. I have given my email address in the description of the video. Now guys, I am going to discuss the fourth point of the agenda of this S&P 500 weekly technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. So this is the daily chart. Let me write it down. Daily chart. D as in daily chart. Daily chart means that the one candle represents one day, not 1 hour or 1 week. One candle means one day. Okay. Now on the daily chart, let's first analyze the candle itself. Okay. So we have this the candle that has formed, okay, on Friday. So the candle, okay, the shape of the candle as of now, okay, we cannot say that it is a spindle, okay, or it is, or that there is, you know, any defined shape of the candle, okay. So but because it's a bearish candle, this means that there will be, you know, bearishness in the stock market, in the S&P 500, particularly on Monday, okay. That's the only interpretation of this candle, okay. Now let's talk about the technical indicators, okay. So through the technical indicators, first comes the Bollinger Bands. This is the upper band of the Bollinger Band, this is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands. S&P 500, then comes the moving averages, EMA, exponential moving average, okay. Because the S&P 500 has closed above all of these moving averages, this means that the S&P 500, and also there is a clear fan out in the moving averages. This means that the S&P 500 is clearly bullish through these moving averages. Okay. Then comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud and has closed above the Ichimoku cloud, this means that the S&P 500 is clearly bullish through the Ichimoku cloud, right? Then comes the MACD. MACD is more than the signal, clearly more than the signal, okay. Both MACD and the signal both are positive, okay. And other than that, the divergence is increasing in the MACD. So what is MACD? MACD is moving average convergence divergence. As of now, the divergence is increasing in the MACD, okay. That is a problem, only problem, okay. Otherwise the S&P 500 is clearly bullish through the MACD. Then comes the stochastic RSI, K channel. Because of this the movement, particularly this movement, okay, on Friday, okay, until Thursday, okay, there was a probable change, okay, we were expecting a probable change, but because of this movement on Friday, K channel is more than the D channel. This means that S&P 500 is bullish through the stochastic RSI. Other than that, the divergence is increasing and all other technical indicators are fine and good. So technically what we can see on this, the daily chart, that the S&P 500 is bullish through the Bollinger Bands on the daily chart. Okay, S&P 500 is bullish through the moving averages on the daily chart. S&P 500 is clearly bullish through the Ichimoku cloud on the daily chart. S&P 500 is clearly bullish through the MACD on the daily chart. S&P 500 is clearly bullish through the stochastic RSI on the daily chart. This means that the S&P 500 is 100% or absolute bullish on the daily chart. On the daily chart, there is as such, okay, no saturation, nothing. And it is 100% bullish on the daily chart, and at the same time it is 100% bullish on the weekly chart. So overall the S&P 500 is bullish, but the only problem is that is what I have mentioned in the weekly chart, okay, that it is trading at the unstable levels and it is heavily saturated. Now guys, I have one more very important information to share with you, and this is regarding that how you can join my Patreon community. So if you are looking for these, the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market, then you are welcome to join my Patreon community. And in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see this page. Okay, on this page you will see that there are these three levels. Okay, so this is the first level and the second level. Okay, this is about the daily S&P 500 updates from Monday through Friday, every day, pre-market update, first, second, third, fourth update, and the final update. Okay, so the first one is the daily S&P 500 updates for non-US Canada residents. Means anyone who is not a resident of US or Canada can opt for this level. Okay, then comes the second one, that is the daily S&P 500 updates for US and Canada residents only. Then the third one is the stock market opportunities and daily updates. Means you will get the daily analysis, the daily updates of the S&P 500 from Monday through Friday as usual. Other than that, you will also get the stock market opportunities every week, minimum 5 to 10 opportunities, or up to 50 opportunities within a month, or in the premium stocks of the US stock market. And once you have joined my Patreon community, then you will be able to unlock all of these updates that I give on the daily basis to my Patreon community members. And guys, if you notice that many members have joined my Patreon community and they are getting these the daily updates, the daily analysis from Monday through Friday, as well as stocks, these the opportunities in the premium stocks of the US stock market for last many weeks, for last many months. So guys, once again, if you want to join my Patreon community, then you are welcome, and I have given the link in the description of the video and also in the comment section. Now guys, I'm going to talk about the fifth and the last point of the agenda of this S&P 500 weekly technical analysis. So in this, the last point of the agenda, I will talk about the probable movement of the S&P 500 from Monday through Friday. That is from June 12th, that will be Monday, through June 16th, that will be Friday, from Monday through Friday, right? Now, a few things that you must understand and that you must consider, okay? The same thing, 4291 and 4310. 4291 is the golden resistance level and 4310 is the 61.8% Fibonacci retracement level. Because the S&P 500 has closed below 4310 on Friday, this will be considered as the first rejection, right? First rejection. In generally, okay, in these cases, what happens is that after hitting the 61.8%, okay, the stock or the index, okay, it comes down heavily. But this did not happen on Friday, because the market manipulators, they might have, you know, some different these are plans, right? So 4310 and this thing. Number 2, CPI data, most important data. CPI, the headline inflation and the core, okay, CPI and the core CPI. Okay, this data will be published on Tuesday morning. Okay, and as you know that whenever the data or whenever any important data is published, then even before the open of the stock market, okay, I give you my analysis, and my analysis is generally different from others, and I give you this the true movement, okay, while the people say that it will come down, okay, but in actual it moves up, okay, and I tell you that, okay, this is how it is going to work. And when the other people say, or the news channels say, okay, it will move up, then it actually comes down, and this is what I tell you, okay, that this is going to happen, right? So if you are my Patreon community member, okay, then on Tuesday morning, even before the open of the stock market, okay, I will give you the analysis based on the CPI and the core CPI data, okay, whether there will be a hold or a fall or the resumption of the bullish trend, okay, or how the things are going to be unfold, okay. So I will analyze and on this the Tuesday. Now the third thing is FOMC, Federal Open Market Committee, okay, meeting, and then the press conference. So FOMC is scheduled for Wednesday, okay. So at 2 p.m. Eastern time, we will come to know about the decision of the Federal Open Market Committee, whether they have raised the interest rates or not. If they have raised, then what? Then by how much? 25 bps or 50 bps? Okay. By 2 p.m. and at 2:30 p.m. on Wednesday, there will be the press conference of the Federal Reserve Chairman. Okay. So, but this time things are a little different. If there comes another rate hike of 25 bps, then the entire stock market, okay, it will not wait for the press conference of the Federal Reserve Chairman, okay, but most likely it will give up, and it will give up heavily, very heavily, okay. But only in case of confusion, the stock market can hold until the press conference. And yes, once again, okay, like I always do, when there will be a press conference, then I will give you the live updates, so that you are very well aware about the things, okay, that otherwise no one is going to tell you. So this is there now. Other than that, the fourth and the last thing, okay, this is about the that the S&P 500 is very much unstable. It is unstable. S&P 500 is very much unstable, okay, on the weekly chart, and weekly chart is a major chart. This means that it will simply override the daily chart. Daily chart S&P 500 is 100% bullish, fine, no problem, but on the weekly chart it is very much unstable. This means that as soon as S&P 500 goes green means even by 1 point, even by one this pip, okay, point in percentage pip, okay, we call it as pip, even by 1 pip, then also, okay, it will go green, and it will be heavily unsaturated, sorry, it will be heavily saturated and very much unstable. Historically we have seen this thing, okay, rarely happening. This means S&P 500 will be, you know, extremely unstable, and it can give up anytime, even without the news, okay, it can give up anytime. And other than that, only the market manipulators, if they want to, okay, then they can keep it at that levels, okay, rather than, you know, bringing it down, or rather than allowing it to, you know, come down. But technically it is unstable, right? So now I hope these are the things, these things are very much clear, okay. So the probable movement, okay, now we know that the S&P 500 is unstable as soon as it moves up and it goes green, okay. Now the thing is that after the formation of the bearish candle on Friday, or after this the reversal, okay, or in simple words, after the rejection, what rejection, okay, rejection from this the 61.8% Fibonacci retracement level, 61.8% standard retracement level, okay, a rejection. This is the very first confirmation that the S&P 500 is unstable, and S&P 500 should change its trend, okay. So this is very much clear. Second thing, that there is a bearish candle, okay, on this Friday, okay. This clearly means that on Monday, okay, there will be, you know, some bearish sentiments. This means that on Monday, irrespective of anything, okay, you will see some bearish movement. If all goes well as per the technicals, then a bearish candle, okay, and if not, then also you will see some bearish movement, something red, you will see red color, even if it will be there for like 1 hour or so, okay, but it will be there intraday, it will be there, some red color, okay. Later it may close at the different level, that's a different thing, okay, but technically If the market manipulators, okay, if they allow, then there must come a red candle, okay, or a green candle can come because of the Monday, okay, because that will be an exception, because Monday is the last day that they have or they can control, because after Monday they cannot control the things, okay, means they can try to control, but it will be very hard, okay, for them, and it will be very difficult for them to control the things, okay, from Tuesday onwards. So they have the Monday. This means that if they have to defy the technicals, then yes, Monday, okay, Monday is what, okay, they can control and they can move the things accordingly, okay, or as per their convenience. Now again the same story, the same picture. On Monday the S&P 500 will once again, if it opens below 4291, if it opens below 4291, then at first it has to struggle around 4291 in order to clear the 4291, okay. If it is able to clear the 4291, then again it will have to struggle with the 61.8%, that is 4310, okay, the same struggle. So from 4291 to 4310, the same struggle, the same thing, the same theory, okay. It will have to struggle again and again in order to move up, okay. If it want to move up, then it can, if it want to move up, then it can, but there will be very heavy risk, because on the weekly chart, as soon as it turns green, as soon as it goes beyond 4299, 4299, as soon as it goes beyond 4299 on the weekly chart, it will hit the absolute critical and saturated these levels through the stochastic RSI, and that is where it will be susceptible for a very heavy fall, okay. So it is already unstable, and if it goes beyond, then this will be the thing. Now if the market manipulators, if they want to keep the bullish sentiments in the picture, okay, at least until the end of the day Monday, okay, in that case they have this, the 4331, okay, at most of 4325, okay, so that if they want to push it, okay, if they want to move it bullish, okay, then they can, and they can do that in order to trap the retail traders. This is what they do it, okay, always. So in order to trade, in order to trap the retail traders, okay, they can push it upward in the bull direction, even though technicals are, okay, as of now technicals are saying that it must not go green. It is surviving, or it has survived for 2 weeks. That is again itself, okay, a surprising thing, okay. But for the next week, no, the market, even the market manipulators, they are not allowed to defy the historical movement. For some time the S&P 500 should come down to 4155 to retest 4155, to hold above 4155, and once that happens, then only it is allowed to take a bullish reversal. That is how it should work. Technically this is how it should work, okay. So now I was talking about this, the bullish movement, okay, in the bull side. So any open below 4291 means struggle at 4291, or open above 4291, or even open comes below 4291, but if it is able to move up, okay, above 4291, then comes 4310 in the picture, because of a rejection through 4310 through 61.8% of the Fibonacci level on Friday, okay. So the S&P 500 will hesitate to breach and to move, okay, beyond 4310, and even if it try to, then again it will be heavily, or it highly likely, okay, we can see that, okay, that it is trying to come down, okay, or it is coming down, okay. So anything above 4291 or 4299 means heavily unstable, right? So that is the one part. Now there is one more thing. If there comes a bullish candle, if there comes a green candle on Monday, okay, what does that mean? If there comes a green candle on Monday, this means that the market manipulators have convinced the retail traders to go bullish, and this means that the retail traders have gone bullish. And now comes the time when I should tell you, okay, that how you can judge whether the Feds might raise the interest rates or not. If there comes a green candle on Monday, or a good green candle on Monday, if you see that the S&P 500 has survived on Monday, okay, against all technicals, okay, and it has gone green, okay, what does that mean? a bullish movement or a heavy the bullish movement just one day before the critical data is going to be published, or just 2 days before the FOMC is in the picture. Okay, this simply creates a lot of suspicion. Historically, we have seen that whenever they have done this kind of thing, then most of, not always, okay, a few times they were right, but most of the times, okay, they did it willingly, and then the result was this. Now let's talk about the bearish side. So bearish side, if there comes another closing, just one more closing that is below 4310, that will simply say that now there are two successive rejections or two consecutive rejection. Even in the absence of any data, it will fall or it will come down. Okay, I'm not saying a very heavy fall, that may come, may or may not happen. Okay, but even without the data, okay, it will simply change its direction, because there will be two rejections or two consecutive rejections. If there comes any closing that is below 4310, doesn't matter, okay, if there comes this means what is the color of the candle. If there comes a closing below 4310, as well as there comes a green candle, a perfect combination, a perfect combination for a fall. Okay, because two consecutive rejections, then on Monday it will saturate the S&P 500 on the weekly chart. Two of these factors will work together, and then it will come down. Now when this will be supported by the CPI data, if there comes a bullish reversal in the CPI data, and there was a closing below 4310, and there was a closing as a green candle, 1 2 3 multiple factors, a very heavy fall, in the entire US stock market and in the global stock markets. Okay, because then there will be these the multiple factors working at the same time. Okay, opposite to this the stock market, the US stock market and the S&P 500. Okay, and the same will be seen in the Dow Jones. And also guys, one more thing, let me tell you that it is not actually the S&P 500 that is saturated or heavily saturated, rather it is the Nasdaq. In actual, it is the Nasdaq. Okay, and the ETF of the Nasdaq is QQQ. It is in actual, or practically it is the Nasdaq and its ETF QQQ that are heavily saturated. Okay, so if there will be like 1% fall in the S&P 500, that will be like 2 to 3% fall in the Nasdaq and the QQQ. Okay, because they are already trading at the heavily saturated level. And already, okay, on Monday itself I have informed my Patreon community members that see, Nasdaq and the QQQ are trading at the saturated at the critical levels. Okay, and then we have seen a very heavy fall. I think that was Wednesday or Thursday. Okay, in the Nasdaq. Okay, a very good fall. Anyways, so I was talking about the bearish movement. Okay, 1 2 3 factors. Now in case if there comes a closing below 4310 on Monday, and the CPI comes bullish, a bullish reversal in the CPI, then again a fall, again a good fall, a heavy fall. If there comes a closing above 4310 and there comes a green candle, then also it will be saturated, heavily saturated on the weekly chart, and then a bullish CPI, again a fall. In any of the cases, okay, 1 2 or 3, there will be a fall, a confirmed fall. The only case where the fall cannot be seen on Tuesday will be if the CPI further comes down and there comes a significant decline in the CPI. That will be the only case when the S&P 500 can hold. I'm not saying that it can go bullish or it can go heavily bullish. Okay, it can try to go bullish a little, okay, but it can hold, means it might not give up. Okay, or it will not give up if there comes heavy decline in the CPI, okay, in the inflation. But once again, remember, when I say CPI, I mean the CPI and the core CPI. Okay, you might see that there might be some decline in the headline inflation, but if there comes a reversal in the core CPI, then again that will be against the stock market, against the US stock market, against the global stock markets, right? So that is why we need to look into the CPI and also in the core CPI. Core CPI excludes the food and the energy prices. Okay, that particular sector, this thing, right? So if the CPI and the core CPI declines significantly, then that is the only and the only known case where the S&P 500, the Dow Jones and the Nasdaq can hold or can even try to move bullish or can even try to go bullish. But it's not necessary that these indices, okay, will go bullish or can go bullish, because in that case they will then wait for the FOMC outcome, Federal Open Market Committee, okay, that the meeting outcome, because already PCE, core PCE, PPIC, okay, these the other data, and the NFP, non-farm payroll data that was published, okay, we have seen back to back again and again, okay, that has confirmed that the inflation is going to hold. Now, irrespective of what happens on Tuesday, okay, the actual movement will then come or will be seen on Wednesday in the second half. Okay, as soon as the Federal Open Market Committee, okay, publish its decision whether they have raised the interest rates or not. If the decision comes in favor of the stock market, okay, means if there comes no more rate hike, if there comes a pause finally, okay, after a back-to-back rate hikes, if there comes a pause, that will be the only case, on Tuesday where the S&P 500 and the entire stock market can try to move up. I'm not saying that it will move up, it can try to move up. The actual bullish movement can come only when there will be the press conference of the Federal Reserve Chairman at 2:30 p.m. Eastern Time, US and Canada on Wednesday. That will be June 14th. If the Federal Reserve Chairman confirms, okay, that now there will be no more rate hikes, okay, this was the pause and there will be no more pause in the rate hikes, then only we will see the bullish movement. Okay, then the bullish movement will be seen towards 4,400 or so. But that bullish movement towards 4,350 or 4,400 will not happen within a day. Okay, because as of now, even without the news, the S&P 500 is already trading at these are saturated levels or the heavily saturated levels. So this means that the S&P 500, okay, cannot go beyond all of the technicals, okay, even with the support of this the news. It can try to move up a little, but again it will be trading at the absolute unstable and the saturated levels, right? And yes, in that case, if the Federal Reserve Chairman confirms that there is a pause, there will be a pause, okay, and then maybe next year, okay, or by November, December this year, the Feds can go for the rate cuts, okay. In that case also the S&P 500 will then it will be expected to trade technically. When I say expected to trade technically, this means the S&P 500 in that case should give up, should come down to 4155 and then test and retest the 4155 and then will go bullish towards 4,400 or even beyond 4,400. Okay, in that case this is how, okay, it should work, right? Now, if the Federal Open Market Committee decides not to raise the interest rates, means a pause, but in the press conference, okay, that will be there on 2:30 p.m. Eastern Time, US and Canada on June 14th. Okay, if during the press conference, if the Federal Reserve Chairman says that this was the only pause in the interest rates and that was necessary for some reason, but then there will be rate hike, in that case the upward movement, the bullish movement, again it will be normal and nominal. Okay, because now the Federal Reserve Chairman himself has confirmed that there was only one the pause, only one time. Okay, there was a pause in the interest rates and now the Feds, okay, they will again raise the interest rates from the next month onwards. Okay, so this means that the stock market, the S&P 500 can try to move up a little around 4,350 or so, and then eventually again the S&P 500 will give up. So on Tuesday and Wednesday, if you are my Patreon community member, okay, then be ready to get this analysis and the frequent updates, particularly during this press conference. Okay, and you can trade accordingly, and you can trade safely, okay, according to these updates. So guys, if you want to join my Patreon community for the daily updates, the daily analysis of the S&P 500, as well as the stock market opportunities in the premium stocks of the US stock market, then I've given the link in the description of the video and also in the comment section that you can use in order to join my Patreon community. So guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. And if you have liked this video, then hit like. And other than that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So guys, this was my S&P 500 weekly technical analysis for the week of June 12th, 2023. That is from June 12th, which is Monday, through June 16th, that will be Friday.